Got S&P 500 down off 1%, rejecting so far this area of resistance. We've been talking about this level as the decision point. So far, sellers still be in control, but the day is young and these market moves have been really volatile. We'll see if buyers can kind of take a stab back higher today, or if this truly is going to roll over again and see the lows. You know, I've made my prediction. I'll stand by it. I do think that this could be the low before that April 2nd date. I may be wrong, and that's the thing about markets is, you know, sometimes you're right, sometimes you're wrong. It's about what you do, how you handle when you are right versus when you're wrong. That being said, let's talk about price action for the S&P just for a second. If we're going to see the bulls hold it, now it's the bulls' turn, right? So we just talked about the bears. Bears, they had this kind of key spot. Can you hold resistance? Can the sellers back this thing down as buyers kind of push this up, right? And what we've seen so far is it seems that they can at least hold this 57.20 area of resistance. But now you've got your next kind of leg lower. On the daily chart, we found a bit of a stronghold around this 5,600 level. The question for the bears now is that if you're really going to see bears take it, right? We've got two key levels. Now we're really chopping into consolidation. 5,600 needs to be taken by the sellers, and of course that previous low around 55.20. So we'll see if bears can take it. I, like I said, have been clear, and I won't change my opinion just because it's convenient. I think that this market is in the process of bottoming out, but maybe I'm early, maybe I'm wrong. Too early to call. And again, we'll see how the price action plays out today. If you get bulls holding this area, right? If this thing bounces, we're just back to this. Bulls, you got to prove it. Got to break this area here. I have no short-term trades open on the S&P 500, NASDAQ, or anything. I have no positioning. I've been pointing out that I'm just waiting for this level to break in order for that to be some kind of bullish signal for me. So I'm interested in being long the S&P 500, but I have no current positions at this time. Okay. Good to see everybody, by the way. Thank you for being here. Good morning, good afternoon, wherever you are in the world. I hope you're doing well. Hope you're trading safe in this market. With the VIX up 7% today almost. Still got some volatility in this thing. VIX spiked up to 29.5, and many traders may or may not know this, but today is, to my knowledge, the biggest OPEX day, options expiry, in history. So the options closing out today, expiring, is going to be massive. And now why I bring that up is that OPEX days like this, especially big volume ones, typically get a surge in volatility, right? As kind of those options are coming to an end, as people are rushing to close out positions or, you know, finalize their options trades. A lot of people forget about how big the options market is. It really is a huge portion of the speculative market out there. People buying, I mean, nowadays you've got 0 DTE, that's days till expiration options. People can make a bet on where the S&P 500 is going to reside by the end of the day. Options is a crazy volatile space, and it is not for the faint of heart. Options are very volatile.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience, and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
So, S&P 500 down off 1.1%, NASDAQ 1.3%. So here is transparently where I'm at with this. From a trading perspective, I want this thing to break out. From an investing standpoint, I want this thing to break down. It's a weird kind of like internal conflict that I have with it, because I'm like, oh, I'd really love to get some long trades going. I think that has a high probability I could, put a tight stop and try and ride this thing higher. I love that line of thinking. But from a long-term perspective in my portfolio, when you give me stocks 10% off, right? You start looking at stocks 10% off, and oh my goodness, if you start going into 15, 20% off, this would be, in my opinion, and it's not financial advice ever on this channel, that would give you a phenomenal longer term entry on some of the stocks that you might like, in my opinion, right? So like when I look at this, I say, look, S&P 500, give it to me, right? Give me that kind of sell-off, and I have to go shopping, right? I have to. That's just what I do from the long-term side of my portfolio, right? From the short-term portfolio, if you break this low, we got issues. Momentum is favoring the bears in the short run, right? So there's two sides to this. From an investing standpoint, please break it, right? From a trading perspective, that would be short-term bearish, and I'd probably have no interest in trading on a short-term basis, the S&P 500, okay? I'm only looking for longs. The reason I'm only looking for longs is because my system is kind of hovering around bullish signals. We're not getting any bullish signals, and this has been a wonderful filter. So we talk about often with your system, whatever you are trading. Look, whatever you are trading, whatever style of trading you do, whatever sequence you use to find positioning, whether it's the edge finder, something else, or your own system, whatever. Having a filter on price action is beautiful, because if you see right here, these -2 scores have been filtering out NASDAQ and S&P 500, keeping me out of the way of the downside move. Other things are pointing bullish, right? Inflation data was actually much better than expected, much better than feared last week, right? COT data shows institutional money is buying the dip. Retail positioning shows retail investors are scared. Seasonally, it's a good time on a historical basis to start looking for longs in the S&P 500 and the NASDAQ. So I have a lot of bullish signals, right? But why am I not in a trade then? Price action and trend are not agreeing with the fundamentals at this time. Does that make sense? So it's kind of like a checks and balances system that I use within my trading. The sentiment analysis, very, very bullish, right? Institutional money is getting long. Retail traders are buying puts and super scared on the market. Okay, that's super bullish. But the timing of it is where the technicals come in, right? Looking for the timing of the entry. If the technicals look perfect, but the other things are no good, there's no trade for me, right? Technicals can be deceiving in my opinion. I like to add technicals as kind of the icing on the cake, if you will. So I'm missing the technicals on the NASDAQ and the S&P 500. The technicals are just not quite there. Now, what I'm looking for, as I keep saying, and the reason that I keep honing in on the S&P and the NASDAQ, I was paying very little attention to them over here. They were choppy. My system was not giving me very good signals at all around this area. And, it started to flare up like, okay, we're close to a bullish reading. What are we missing? The last piece to fall in the edge finder is the technical breakout, the trend to flip bullish. Does that make sense? So I've been on the sidelines heavily for the S&P 500. I don't personally, within my system, have a reason to be long or have a reason to be short, right? Again, that is why I think that within whatever you are doing, you may do something completely different than me. But having a checks and balances, a system that waits for confluences to line up, can significantly improve your trading results. And that's the reason that I've built kind of the way I do what I do around this idea, right? I want to wait for confluence between technicals, sentiment, and the economic data. That's my three my three parts, when they all fall into place, oftentimes that's where I find the really nice trading setups like gold, right? So I'm long gold using the exact same principles that I just discussed. I may actually get taken out for a profit here pretty soon. If support breaks here today, we'll take profits. I would be fine with that going into the weekend. But we'll see. Might bounce off this area. But I've been long on gold since March 3rd. Edgefinder gave me a bullish confirmation. Technicals looked great as we pulled into this area. And what I really liked about gold at the time, you can see I didn't catch the bottom, but after we saw that rejection off of these lows, held support, I went long, put a stop below, and it just kind of never came back, right? It just has been going and going, and I've trailed stops several times. And, the reason I trail stops is just because, when you get these really nice runners, it can be really great to just stay in the trade and continue to hold. So I've been sharing this trade in the Discord, and I do have my stop loss trailed on this one. Let me see if I can pull that up here. So, like I said, trade update on this one is basically I've just trailed my stop loss using the 4-hour chart. My stop loss is at 3,015. And there's nothing for us to do on this one, right? So if you're in gold, congratulations. If you're short gold, it's been a tough ride, and it's been rough. So if you're short gold, it's been tough. If you're long gold, it's been really, really nice. Just riding the fundamental trend, riding the technical trend. And that's what we do on this show, right? We talk fundamentals and we combine that with price action to find high probability trading setups. That's the idea. Does it work all the time? No, nothing does, right? We take losers. We take wrong ideas too. Every trader does. But I continue to hold the gold trade. And plan is, like I said, I've updated my stop loss in the signals room to 3,015 an ounce. If this breaks, we take profits and we move on. If this holds again, which this would be, I don't know, 1, 2, 3, 4. This would be the 5th time we hold this area. If that happens, then we're just going to continue to trail stops. But we'll see. This is a pretty key area for the bulls and the bears who are watching gold on the 4-hour, the 1-hour chart. You've got a really big area of support here. And the reason I've got my stop loss here is because I think that if you break this, if you get something like that, then I think there's a good chance that gold will finally give some reprieve to the downside, right? We've just been in this perpetual uptrend. That doesn't go on forever, but it can go a lot longer than you think it can. Like we could, I am by no means bearish on gold. Like we could just be consolidating here and then boom, we go up another, 50 points on, or, $50 an ounce on gold. The nature of gold is just when you think you've timed the reversal, it does one of these candles, right? Jumps up $40 an ounce or something like that in a single day. So do I think that's necessarily going to happen? It could. I would say it's more likely to keep going up than it is to go down, which sounds crazy because a lot of times people get it in their head that like, oh, this is stretched. That means the longer it goes up, the more likely it's going to go down. And those are some famous last words in trading because a lot of times momentum just keeps it running and running and running. But with a daily candle yesterday, a little bit of indecision, some follow through to the downside today, I'm cautious on this position. And like I said, stops are locked. We're going to take profit if it breaks. And if it keeps going, I'll tell you what I'm looking for. Let's just say that today bulls hold. We're going to go probably back to that resistance. And then we're back to, again, programmatic thinking, systematic thinking. If this were to happen, we'd say, can this thing break? And if so, any sort of higher low, we rinse and repeat what we've done a couple times now. We trail stops below structure and we go onwards and upwards, right?
Gold's actually looking pretty good. The trade that I took on gold futures is up about 70% of my max profit already. Gold finally turned, which is not a surprise. I was expecting this to fall. We had about that 15% stretch away move. I think this is good for an opportunity to hopefully get a position on gold. Is this it? Like this little tiny pullback, or is it going to be the start of something to come, like a, is there a topping pattern in gold that comes back to a deeper level? I don't know. But as long as we stay less than 32.50, then I'm looking good for my position here. And then any add-on trades, I'll be looking to add a little bit more GC exposure or more GLD exposure on a dip. Silver also having a bit of a pullback. Let's just go top down today. Interesting spots at the market. We gapped lower. I look at this a couple different ways. Either we go out slightly bigger time frame here. So I'm looking at, we have like $4.5 trillion in option expirations today. And you'd think by watching 25, 30 minutes of price doing next to nothing today, it's like, would anybody even notice that? And the only real shining star of today is Tesla. In the entire heat map, we've got about 70% of stocks down this morning. And yeah, 72.4% of stocks declining today. And Tesla is fading. So we're at like 2 or 3% positive on Tesla. Now it's 1.24. We'll see. This is an interesting kind of look for the day. The markets really haven't done much outside of gap lower. Futures wise, futures has climbed back a little bit. So, NASDAQ futures almost has taken away the decline from 8 o'clock this morning. If we end up taking out a recent high here, that would be a bit of a surprise, but I wouldn't be offended by that either. So I'll add a couple alerts, see if we get back to these recent highs. But talking about the high to low swing, we had a really strong level here around 5,600 on SPX. And I looked at today as like a coin flip day. This could be seen as a low to high pullback, and the market is just using this as a flat pattern to find the right hand side of the trend line into either next week's trading. If the market still maintains a little bit of a bid off these lows and we come back to that like 38 to 50% zone that I talked about, where the bulls and bears can really fight it out right around that 5,800 handle. That would be getting us through the end of the week, which is the 20th expiration, gets us through the quarter on the 31st, and then the market kind of gears up and gets ready for a potential volatility event coming into early April with tariff talk. Okay. So, but when we open up this morning, it's like, well, we're sitting right at this trend line. If we end up breaking the floor from Tuesday, the market may claw back down and try to find this gap, maybe even try to revisit the lows. So far, our price isn't doing anything. It's just been relatively calm this morning, which is a bit of a surprise, but I'm okay with it. I just see these are my levels. So pretty sticky spot right around this 5,600 handle. If 5,600 can hold, then I, could see this market trying to come back and fill in some of this gap from yesterday. If 5,600 doesn't hold, then look left. I'm going to slightly higher time frame. If we don't hold 5,600, which would be the floor from Tuesday, so we've got this gap to close out from yesterday's close. We have this gap from Thursday, Friday last week. Okay. So what is the market going to do today? I don't know. I'd like to see the floor hold. I'd like to see it get back into this area here. I just don't see a lot of levels between 5,650 and 5,600. It's really easy for the market to just scream lower. It's really easy for the market to do nothing. And so I'm just kind of sitting on the sidelines and just going back to see, okay, what I do this week. Made a lot of trades, a lot of profits, more income trades that'll close out for full profit today. They don't have to touch and manage. I added some calls. I added some diagonals. I extended some of my trades out, but a lot of income trades for this week. If you look, gold would be this. If you're taking little tiny stabs at it, a pullback here, small entry, a pullback here, small entry, a pullback here, small entry. If you're willing to kind of dollar cost average into gold, I think having a level somewhere around, that's a 3% correction. That's a 7% correction. That's about 11% correction. I think that's great. Because I gold running to all-time highs again and again and again and again with what seems to be a pretty healthy bull market. I like the trade, and my stop area, if I was going to take the stop, would be anything below the 200 moving average. I wouldn't want to see too much damage done to it, but I don't know how much longer we go before we hit it. So anyway, if I'm trading small enough, gold is is fine. Like just dollar cost average into but give me a pullback. That's what I'm saying. Like a pullback to a minimum, this previous resistance or this 21 moving average at the minimum. The last time we hit the 21 and the 50 combo, it was a pretty good combination of support. This hit the 21. It's like it's just been an aggressive bull trend. So I'd like to see at least a pullback towards the 2150 moving average, and maybe call that position 1. We pull back towards like the 100 to 200 moving average, position 2. I'll wait for that. If it keeps going and going and going and going, okay, I'm not going to get the dip that I want. I'll wait. All right, let's get to currencies. Okay, currencies. Aussie CAD. I'm still bullish on Aussie CAD just because it's a slight positive swap. And to me, this is an easy range currency. You're buying the lows, you're buying the lows, you're buying the lows, and there is equal highs and equal highs to trade back to. So if I'm just leveling myself into Aussie CAD, I think there's equilibrium profits and there's range profits at resistance. So it's a slight positive swap. It's a reliable, efficient range currency, and that's mostly what I'm doing. Aussie Swiss, still stacked up positions here. I've got buy limits and buy stops above. Yen showing weaker Aussie. Let's go currency strength today. Japanese yen weak to strong. Aussie weak. Yeah, I mean, 25 and 40 is not a lot of volatility today. The Dow, which is down, but it's paused on the day. I mean, it's flat. You can US 30s thrown in with S&P. It's like we're down like 1% with a gap lower. That's pretty much it. Aussie New Zealand. I'm still looking for Aussie New Zealand to see if we will maintain a slight uptrend and a channel into these highs. So pullback. I may look at another bounce on Aussie New Zealand. It's just going to be a grind. Timeline horizon for what? Indexes? I mean, I'm looking all terms, like short, medium, long term. Right now, we're dealing with a lot of like short term is probably, maybe a short term recovery to a near to medium term. Like I think April might be like another leg lower initially, and then it kind of catches itself and moves higher. I think there's a decent seasonality to the market, for April, May, June. It really depends on like how severe these tariffs are coming out in April. Like the market doesn't know. I think a pullback towards like the slide of a high, low, market's down, X percent, right? Dow's down like what, 7-8% from the highs. So the US 30 down about 7-8%. If it pulls back to a 50% area, that's a good spot to be de-risking, deleveraging. And if we go another leg lower, I want to be ready for that. If we go higher, pleasant surprise. But I think the bulls and bears are going to sit and kind of force us to we'll kind of wait and see whether the market is capable of going higher. I'm a little skeptical on the higher. I think this market's going to struggle to get to all-time highs anytime soon. If it gets all-time highs soon, freaking great. I'd love to see all-time highs, but I'm not counting on it. Okay, Aussie dollar, I'm out of that trade. This one closed out for profit. I had 2 longs and one. I had 3 longs. Closed out 2 winners and took a small loss. Aussie CAD, still liking. CAD Swiss, leveled in. Buy limits, buy stops. CAD yen, don't care. Swiss yen, don't care. Euro Aussie, be careful on this stuff. This is a weird move. So if this is a swing, is this going to go back up and retest the highs and then fall? If we have some severe risk-off trading, is this going to just continue to head higher? I don't know. This is really volatile. Be careful. Trade with confirmation. If this is a high, low, lower high, if it breaks this low, this is a cup and handle pattern. So if we break the low, there could be, nice thing about technicals on Forex is it's very efficient. So if we break this low, we probably have a pullback at least towards the 50% zone. So take this low to high. And if we break this low here, then we can go back into about that'd be a break of around 7,100. And we could go back to around 6,900. So there's some scalping opportunities in there with the break. If you want to look a little bit tighter, then you're looking to see if there's a rollover, get some confirmation stop loss above, and you can go after 6,900. So either this thing turns to break these lows, or we come up to a equal high, and you can sell nice and high for a range trade. But take the higher time frame structure, go down to a smaller time frame for some precision, and see if you can find something. EuroCAD, this one hasn't pulled back yet. This one could be a pretty good one as well. High, low. If it pulls back for a lower high, looking for another chunk. Take this low, take this high, find your equilibrium. Probably a good spot to look for some near-term profit. I don't mind that trade. Euro Swiss, same thing on the other Swiss crosses. I've got levels on both sides. I'm just buying it. I'm buying Euro Swiss. Euro Pound, no trade. Euro Yen, no trade. Euro New Zealand, be careful. Like I said, Euro Aussie. Watch your equilibrium levels. If we pull back for a lower high or pull back for an equal high, shorter time frame confirmation, watching that. Euro Dollar, a little bit of a pullback on Euro Dollar. It's not a surprise. Dollar index is looking to rally. Euro Dollar may be pulling back into these inefficiencies. So I could see Euro Dollars doing this, pulling back. Okay, so if anybody's short Euro Dollar right now, maybe at this equal high, I would put a stop loss into break even. I wouldn't be messing around with this trade. If it goes a little bit lower into these inefficiency candles, then trailing a stop. Not crazy complicated. But this is also pretty well supported. If this is a zone that gets picked up by the bulls, looking for something bullish to come out of here and see if this market wants to head back up to 1.12. A weaker dollar seems to be the plan of the Trump administration. The weaker dollar is also likely going to help bring down the yields in some capacity. Maybe the 10-year yield, maybe not. But that's at least part of this initial pain plan with cutting fiscal spending and taking away some of the punch bowl. Pound Aussie back up to highs, no trade. Pound CAD choppy, maybe a resistance level up here with this low to high. If we have an equal high resistance, smaller time frame could be a pretty good trade to find some equilibrium. Wouldn't be a bad trade if you're watching between higher time frames and lower time frames. Pound Swiss, I'm still hanging long on this one. Pound Yen, no trade. Pound New Zealand, be careful. Pound Dollar, just to pull back into these candles here. So a little pullback into these candles. Again, if it stays bid, maybe another chance to watch a weaker dollar. There's a pocket up here. Is it possible that the pound dollar runs back to 3,400? Maybe. But I like pound dollar a lot less than euro dollar. I think euro dollar is a cleaner read right now than pound dollar. New Zealand CAD, same thing in Aussie CAD, just sticking with this range. I'm long. I like this trade back up to highs and highs. If it comes back to lows or lows or lows, I'm just going to buy more. Range trade. New Zealand Swiss leveled in. New Zealand Yen. I mean, it bounced off the lows like we talked about. I didn't take any trade on it. I don't like the negative swap, so no trade. New Zealand dollar, I close out for a 30 pip loss, and then these two combined, the total pips was 290 pips between the three trades. That trade's done. Dollar CAD, who cares? I don't know what's next. Maybe this structure here, high, low, little indecision. Does it break? I don't know. Maybe if oil gets a bid, then sure, maybe the CAD gets stronger. I just don't see a lot of reason for the CAD to get too much stronger unless it's just all dollar driven. If you want to see dollar weakness, euro dollar is probably the best trade right now for dollar weakness. Dollar Swiss, no trade unless we come back into this area. I want to say 86, 85, 84. I'm just going to buy and try to trade the range. Dollar Yen, no trade. We'll see what this one does. If this is a topping pattern, then any type of swing pullbacks, looking for that trade. But I'm not going to trade the dollar yen. I'm going to trade FXY, and I'm going to trade 6J for that trade. So this is Japanese yen futures. This is an ETF that follows the Japanese yen. I don't want to trade Forex, not with the Japanese yen. Negative swap is a pain in the butt. I'd rather trade positive swap and get 3 to 4% on the currencies that I'm holding because of the interest rate differential. Plus the Swiss Central Bank cut rates this week to 0.25%. So one potential outlier for 2025 before we go today is the Bank of Japan might still be looking to raise rates. Might. And if they do, they are going to be one of the only central banks that would be raising rates. So take a look at this chart, and this is like your G20s. So let's look at any of these major central banks. Okay. Japan is the only green arrow. Okay. Everything else is down, which means the entire world of central banking is cutting rates right now. Japan is not. Now, this conversation wasn't nearly as important as going from negative 1% or negative 0.1% to 0 to then plus 0.1 to plus 0.25 to now plus 5, plus 0.5. I mean, they have raised rates multiple times. And so even at, 0.5%, it's like, is the next step 0.75? Is it 0.75 to 1%? If they are on their way to 1%, and this is the only central bank that is doing this, here is your curve of positive interest rates to negative interest rates. The Bank of Japan was here for a decade, and then they got to 0, and then they got to positive, and then they're moving. So they're going this way. Japanese yen, Bank of Japan is going up. Most other central banks that raise rates are now coming down. So I do think that takes away a little bit of the attractiveness of this carry trade that has been so prevalent, popular the last couple of years. So I don't know if and when this happens later this year, if they raise rates again, if this starts to be this potential risk like we saw last summer, which was the Japanese yen deleveraging. So just putting that on the radar this year, that could be a reason for the Forex market and maybe even the stock market to show some heavy amounts of volatility in 2025. Bank of Japan is a wild card, always. I think Japanese yen is either traders are loving it so much because they've made tons and tons of money on it, or traders hate it absolutely because it doesn't make any sense technically. Like, it is more of a sentiment, irrational currency pair to me than it is a technical one, because when it moves forever, and it feels like it doesn't want to rebalance, and it does eventually. So I still believe in the technicals, but you wait sometimes 6, 9, 12 months for technicals to rebalance. And if you're caught on the wrong side of that move, you hate your life as a currency trader. So don't be on the wrong side of the yen crosses. Easiest way to avoid that is don't trade them.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.